Good morning. Today, we're going to talk about one myth when it comes to timing the market. This relates to investing. And what this is, it's the belief that you will be able to take your money and put it in the market at the opportune time, at the optimal time for you to get the best price for your investments. The reason that this is a myth is because no one knows when that is. No one knows when that ideal price is going to occur. And so believing that there's some point in the future where you're going to be able to get that is at best very, very difficult to identify. I mean, we could say conceivably that if prices are lower in the future than they are today, that would be a great opportunity to buy because I'm going to get that investment at a cheaper price. But what's important to keep in mind here is so many events take place that are outside of our control, that are unpredictable, that we're really not able to identify when that is. And statistics show that even though it's uncomfortable, the smartest way to invest is actually, if you have a lump sum of money, is to invest it all immediately. Now, this doesn't necessarily mean you're going to put it all in the stock market or you're going to put it all in your savings account or all in precious metals or all in digital currency or all these different various assets. What it is you're going to invest it in a way immediately that reflects your risk tolerance. Something else that's a corollary to this that I want to bring up is we're getting close to election day, right? We're in election season right now. Many people are already mailing in their ballots if they're not going to be able to go to polls individually. And many believe, hey, if certain parties win control, that will mean well for the stock market or it won't mean well. And this is a little bit misleading. The reason I say that is it is true that certain government policies and laws are favorable or unfavorable for business. That is true. However, individual elections generally don't move markets enough to justify timing them, right? So I definitely would not recommend, if you're of the belief that the elections in a little over a month are going to result in a certain way, and therefore you should sell all of your investments and then buy back in when it's cheaper. That isn't a good strategy. And the reason why is because you don't know how they're going to turn out. And even if you predict it properly, you still don't necessarily know how the market's going to react. So keep that in mind. Timing is not a good market strategy. That doesn't mean people don't do it and make money. Sure, you'll be able to find a story of somebody who said, hey, I bought in at the right perfect time. And good for them. But doing that is not a good strategy because statistics are not in your favor. Please post a question or a comment